Peter Eliades with you. This is Stock Market Cycles Update for Monday, November 11th. 11/11, Veterans Day. I hope we all pay tribute to those veterans in whose name this holiday has been celebrated. All veterans, especially those who made the ultimate sacrifice. We all have probably one or two of those in our families. So I reach out and offer condolences to those of you that suffered a loss and pay tribute to our veterans who have done their best to keep us free. Okay, on to the markets, and I can't tell you. I mean, I've gotten excited before. We've had certain situations come up, and you see something, you see a projection, whatever. I think we're at a point where a heck of a lot of pieces are coming together for a market top. As I know it's not the first time I've said that, but when you have so many indexes having reached not only their long-term projections, but pulling back from there and coming up to these loop projections that have now been met on virtually all the indexes, except for the Dow. And this is what we showed you on the weekend update. Remember this chart? 12.1 offset. Dow Jones Industrial Average came down in this decline here, which formed the loop, which gave this upside projection. It's the highest one you can get from that loop. Okay. And it calls for 44,585 rounded off to 44,757. Now, what I did today is I spent some time, I'm not going to show you all of them, but I'll show you the one that were closest to us. I'm always curious from the daily projections what the intraday ones look like, 30-minute, 65-minute. And the one that we're closest to in terms of the equivalent offset for a 12-1, here it is right here. This is the equivalent of a 12-1 to 13.8 on the 30-minute chart. You can see the offsets in the bottom right. 157.3 to 179.4, and look at this. The high for the day, you can see it right here, 44,487 rounded off. The lower end of the projection window, 44,513. 26 points, that's like less than 0.1%, okay, away, right here. That's how close we got. Now, generally what you do in a situation like this, and this is a real old Hearst theory going back to his original book called The Profit Magic of Stock Transaction Timing. He showed ways to play this if you're trading. You reach a projection, a final projection ideally. You draw the shortest term uptrend line into that area and wait for a breaking of it. Well, if you did that here, I think it's broken. Let's take a look. Wow, look at this. Right down to the trend line almost exactly. So this would be an indication on the Dow. What we'd really like to see is a full completion of this projection. This is the lowest one of the three, okay? The three equivalent ones. They're all equivalent to a 12-1 to 13.8. The 65-minute, the lower side of the projection window was 44,691. So that would be up here somewhere at the end of my cursor, okay? So that means that there is more room. You don't want to be hasty here and jump to conclusions. But what we're trying to do now is fine tune to the nth degree, okay? All these projections have been met. This one got so close, I think you could call it met for practical purposes. And so all you do now is either take action up here, you know what your risk is. This is on the Dow. We'll show you the S&P momentarily. And you should be pretty comfortable because your risk is going to be quite limited. Your risk will be the upper end of the projection window, getting beyond that. Okay? Okay, let's look at the S&P. And here's the 12-1 on the S&P. Look at this. Virtually perfect. The upper end of the window, 6,022.20. The high today, 6,017.31. 5 S&P points away, okay? We're talking about hundredths of a percent. And let's quickly go through the routine here with the offsets. 3.5 to 4. No, certainly way above that. That's down here. 7 to 8 up here. We've reached that comfortably and surpassed it. The one we just looked at was the 12-1. Don't need to look at that again. That was a perfect meeting. Here's the 24-2. Now, this has been controversial for quite some time, going all the way back here to the end of August, okay? Because theoretically, we got this projection. It was big time to the upside. That's this little guy up here, okay? Now, the computer shows it as invalidated. If you want to be really, really, really bullish and say, well, yeah, but you can put in a Nick filter here and it probably won't invalidate this projection. And you're probably right. I don't know how many days of a Nick filter you would have to put in, but you're probably right. So if you wanted to be real conservative and you got into a short position, you could use the upper end of this, the initial 24-2, which is 6,116. I don't think we're going to be quite that conservative. Keep this in mind if you are conservative, though, and you're going to take a negative trade, because that's what we're moving into here, folks. Here's the 48.4. Nope, not going to get any new projections from that. 96.8, same thing. Not going to get any further upsides from that. So I'm not going to go through the whole routine here because we've done this so many times in the past couple of weeks. But I think you get the point now that virtually every upside projection has been met. Okay, on the S&P, we're almost at the far upside of that projection, and the only way you could make half an argument that there's higher is the invalidated 24-2 that we showed you up here. Okay, I want you to be aware of the psychology in the market now. Okay, coming into the election, and we talked about this pre-election day and the day of the election, there is uncertainty, and everyone says, well, the market hates uncertainty, and we need to see what's going to happen before people can resolve in their minds which way the market's going to resolve. So now we know, okay? We know what happened in the election. And for the market itself, it loved the election. Look at this. This is a daily chart. 1, 2, 3, 4 days, okay? This was the election day right here, Tuesday of last week. Wednesday, Thursday, Friday, Monday. So everyone's elated now. Oh boy, Trump is in there and capitalism is going to love it and we're going to do just great. Well, the problem with all of that is, first of all, that kind of sentiment, almost unanimous sentiment now. I'm very excited and anxious to see the sentiment readings tomorrow night from Investors Intelligence. Those are the ones that we usually update you on, okay? Sentiment there has been very high on the bullish side, going all the way back here to July. I think there were 5, 6, 7 weeks in a row of readings over 60%, which is considered very, very dangerous territory for the overall market. And now we've gotten into the 50s again over the past few weeks up here. Well, let's see. I can't promise you, but there's a good chance, I think, of getting into the 60% level tomorrow night. That's when the readings come out for this week. I will report those to you on Wednesday. But the point is, the bullish psychology is very high here. It's like everything's been resolved. And boy, this market's just going to really take off to the upside. The only problem with that is that that's all been anticipated ahead of time. Any kind of crazy, optimistic outlook has been anticipated by the market, and it's taken the market to its most overvalued level in history. Okay? Arguably, it's most overvalued. I know you might get some arguments, people that say, no, it's not overvalued. I'll put this together and I'll show you a forward PE ratio, or I'll show you this or that. Forward PE ratios are completely meaningless because they're taking into consideration estimates of earnings. And estimates of earnings have notoriously been wrong, okay? So I don't know how many of you get caught up into that game, but please don't. Okay, I'm kind of struggling. This is another chart we're looking at, an S&P cash 5-minute chart. My struggle is what I want to do is find a trade for you that will minimize risk. We were in a position in that last trade that we took. And remember, this this is not going to be a trading service all of a sudden, okay? We do the projections, you make the decisions. But I had promised you that I would come up with what I figured was a trade around this area where all projections are being met to the upside. And the question becomes, do you sell short towards the top of the highest projection window? Or do you wait for a break of a trend line, something like this? So I think this is what I'm going to do. I'm going to give alternate instructions. We will attempt, now that the Dow projection you can argue has been met, so virtually all projections have been met. The Dow is the only one outstanding over the weekend on that update. Let's do a close zoom in. This is the S&P 5-minute chart again, S&P cash. There's this little uptrend line here, okay? So what we're going to do is give alternate instructions, okay? The initial short we will try to make is a move back to this line. Now, when I say back to this line, because it's a dynamic line and it's going to change all day tomorrow. Move it over a bit here. So initially the line's going to be at 60.1258. And by the end of the day, it's going to be right around here. This isn't quite the end of the day. It's 12:45. And the price will be at 6,008. So we will try, on the assumption that we might indeed get a snap back to this downtrend line. Let's take the price that it will be right towards the end of the day, 6,780. And we'll put an order in on the S&P, or again, these are your decisions to make in terms of how you trade, whether it's on SPY, the ETF for the S&P cash, or using puts and calls. However you want to do, you need to translate these instructions into your own vehicle, whatever you use. So we're going to take the very end of the day, let's say 6,008, okay? We will attempt to sell short if the S&P cash gets to 6,008 or higher. And if we break this line before we get to 6,008 or higher, we'll be shorting there. Now, the difficult thing is a lot of you don't have software and you say, well, where the heck would you break the line? Well, let's use the breaking of the line early in the day, okay? Let's say it's 59.93. I'm going to write these things down. Hold on. Okay, those are the directions and the instructions for negative positions in the S&P cash. If we have a rally to 6,008, 6008 or higher, that will be the trigger to take the negative position. If, on the other hand, before it reaches 6,008, or if it never does, on a break of 5,993, which would be right around this trend line at the opening of the day, you can take a negative position there, okay? So a break of 59.93 or a move to 6,008 or higher is where we will take our negative positions. Okay, let's take a quick look at Nvidia. We looked at this for you over the weekend, and by every measure and all measures, it was like, wow, this thing has reached, it should have reached a very important top up here. Now, big deal. It was down almost 2% today. That's a beginning. But in terms of both valuation and price projections and technicals, this stock looks really ugly. I'm not, all of a sudden, I'm looking at these and saying, well, maybe you should be giving recommendations here. No, I'm not going to do that. But for those of you that are technicians out there, I can show you certain things that you could do in terms of wanting to take positions. For example, on Nvidia, this is a three-pointed trend line, okay? The low of September 6th through the low of October 2nd through the low of October 31st. Validity is given to the trend line because we had a third hit of it right here and then went on to new all-time highs. Well, at this point, a breaking of this trend line should be a very negative sign. Tomorrow, that break would be around the 137 area, let's say. It says 137.68. So a price of 137 would almost surely break beneath it. So that's not a recommendation, okay? I'm just showing you, giving you guidelines for those of you that are interested in this kind of stock. Okay, we'll wrap it up there. These are beyond exciting times because it looks like so many things have come together. Market sentiment, market projections, they all seem to be coming to a head here. Let's see what happens. One final thing, let's close with this. This is an indicator that at times is very, very successful. It's not perfect all the time, but you don't get too many signals from it. And when you do, you should pay attention to them. This is the VIX index on the top and the S&P closing prices on the cash at the bottom. The indicator is the VIX index in association with its Bollinger Bands. And whenever we mention indicators, we should always give the parameters. These are the orthodox typical parameters for Bollinger Bands. A moving average of 20 and the upper band is 2 standard deviations, the lower band -2, okay? Those are the parameters that you use. And the signals are given just completely the opposite. When you look at this, for example, when you get above the upper Bollinger Band, I'm gonna zoom in on this a little so to make it even clearer. Okay, you get above the upper Bollinger Band, and then you move back below it, like here. It might have made it or just missed. That is a sell signal from the indicator, but it's a buy signal on the market. And look at this, perfect place. Happened here again. Got above the upper Bollinger Band, and now you wait for a move back into the Bollinger Band. That happened the very next day. Follow the cursor to the downside. You got a buy signal right here. Not bad. The last one, right here. Above the Bollinger Band, close beneath it, right here, buy signal. Now, the interesting thing is the opposite is true. When you close below the lower Bollinger Band, you wait for a move back into the Bollinger Band. That gives a buy signal on the indicator, but a sell on the overall market. You don't see those too often, especially in a bull market. Let me move this over a little and start to show you what I'm talking about. See, go back on the history of this. How many times have we closed below the lower Bollinger Band? Came close to it here, but never got below it, and the bands were very narrow. No, nope. Looks like close right here. The close was 1304, the lower Bollinger 1289. You're still above it. The next day, close 1292, lower Bollinger 1274. You're still above it. Let me do a complete scroll across again. Look at this. I mean, it's almost impossible to find a close below the lower Bollinger Band, okay? You start moving it over some more. Here you go, finally, right here. The VIX close was 1309, the Bollinger Band, the lower one, 1315. So it closed underneath it, and the next day got back inside it. Sell signal for the market, that's right here. Pretty good, huh? Now, again, I'm not going to show you just the good ones. These were a couple of bad ones here because they were given and they didn't work. You got below the lower Bollinger Band a couple of times here, but let's take this one right here. And then getting back into it, you got a sell signal. Well, selling right here was not very profitable, okay? But I think you can see from the few instances and examples that I've shown you that it tends to work out pretty well. Come back here. Let me move this over a little bit more again, too. This is all the way back in August of 22. Remember this August high here? It was signaled by this indicator. Closed below, got inside the Bollinger Band, Got a sell signal here, a little premature by a day or two, and then this happened. So just a quick indication of the potential successes of the signals, and we got one today. We had 1, 2, 3 closes beneath the lower Bollinger Band. This one was close here. We had a close of 1494. The lower band was at 1520, so below it. Today, the lower band at 1456, close on the VIX 1497, back into the bands, giving a sell signal on the market. Let's see how this one works out. Okay, we've had some fun here at the end. That's going to be it for now. Thanks for watching. We'll talk to you tomorrow.